I wanted to thank you for coming to our second series, part of the series in investments. Today, I do have a special guest with me. His name is Ned Krowicki.
Yes,
I said it right. Just to recap from our first series was about defining your goal of why you want to do real estate investing, and also if you have clients that you're working with, how to help them define their goals and where to find the property. So that was the first series. Second series is about finances. So thank you all who did the survey for me last time to give me some feedback, and majority of people wanted to know how to do the finances. Where do I begin? Which is why I have Ned here with us. He is a lender, one of our call group recommended lenders, who's got also some investment experience since maybe 2009. So I wanted him to kind of give his perspective on how he's able to fund some of his projects he's worked on, and give some feedback also on some of the other methods of getting your investment portfolio started. So with that said, Ned, I've talked to you about my experience as far as how I've done my financing, starting with smaller banks and getting it started that way. But in my conversations with Ned, he's shared with me how he's got his with some hard money lending and other financing options as well. So Ned, if you could tell everyone a little bit about your background in real estate investment and how you got started.
Yeah. Hi. So I'm originally from Connecticut, Bristol, Connecticut, and it's sort of like one of those old factory towns. So growing up, there was always, the triple deckers that you would see everywhere. So in 2009, in the bottom of the market, I started buying, renovating, renting, and refinancing multifamily units. I ended up getting about like 10 or 12. So I had a ton of tenants and have dealt with all that, but basically got started always with hard money, and then knew that I would have to create value, get them to be cash flowing, and then refinance them. And looking back now, it's crazy, how much people don't know. So that's what I'm here to try to help people with stuff. And that's the goal. But yeah, so I've been doing that, regular flips, single families. I've done some new construction, Airbnbs all over the country, and just love real estate and the whole conversation. So really happy to be here. Excited to share.
Yeah, it was really exciting to hear Ned's story and how he got into becoming a lender through his want to know more about real estate investing. So it's kind of how I got started with real estate in my current career. Is I was buying properties for investments, and then I wanted to find out more about the rules, regulations about being a landlord. And I realized getting into real estate and training that they didn't really teach me a lot about that. So most of my knowledge has come from, School of Hard Knocks. So Ned, what would you say would be probably one of the like far as when you first got started with hard money lending, what did you really learn from one project to the next?
I would say a couple main things that I learned would be, you have to make sure the property can cash flow. The number one thing is that you can pay off the interest, and just like the importance of actual cash. So you could rack up a credit card, for $10,000, and the only cash you need is like $213 a month for the minimum payment. And so really protecting your credit score always by being responsible with cash flow is the number one most important thing for investing in real estate, I would think. Getting started at least. And always. Yeah. Cash flow, cash flow, cash flow.
Yeah, I think everyone is looking for that cash flow, especially, whether it's funding, residual income or helping fund your next project. One of the things, especially in our current market where real estate is just really booming and on fire, people ask me like, what would you do to get started? How do I get started? Where do I start with my finances? And even working with your current sellers or buyers who are looking to buy another home, there's so much equity. The area is growing. Our growth rate, I think I've read, is like, 15% as far as, the population growth here. It is causing that appreciation in our market. So sellers are like, well, I would sell if I had somewhere to go, but since if they're not planning on making that move, they're still sitting on a ton of cash, right? So one of the options for investing would be to utilize that equity in your own home. I mean, I know I've seen a huge increase in equity in my current home. And I'm like, wow, just to be able to take some of that cash out and fund another investment or revenue stream would be awesome. So that's one of the easiest ways that I can think of to get started if you are working with sellers or buyers, who are looking to finance their next move, but also if they're looking to start an investment portfolio through their equity in their home. One of the ways they can do that is through an equity line of credit. Most times that interest rate is pretty low, and you usually it's just a second mortgage on your home. Another way to do that is a cash out refinance to be able to get access to that equity that way. I know yesterday we talked about maybe even doing like a second home, right?
Yeah, so things changed a little bit recently, but a great way to get a house at your first investment property, if you're already owning a house, would be a second home. You could have no problem renting it out and using it part-time. You can get away with putting down less than the 20 or 25%. You'll have, higher interest rates and mortgage insurance, but for a lot of people getting into real estate, the initial cash is the problem. And then of course, make sure it cash flows with your rentals so that you can always pay the bills.
Yeah. You want it to pay for itself.
How often do you have to be in your second home for it to count as a second home?
I don't know the exact number, but it doesn't, it's not very much. I think it's like 2 weeks a year, or like it's like less than 30 days or 60 days for sure. And it was a really great thing about 6 months ago or something, when you could have the same kind of interest rates as you would for your primary residence, but it definitely with everything has jumped up. And piggybacking on what you said with tapping into your equity, if people were lucky enough to refinance when rates were like 2.5% or 3%, it might not make sense to do a cash out refi, but you could stack a home equity on top of it now. So that's probably a better conversation for most people today looking for access to cash. And hopefully they're using it to buy more real estate if you're pulling out a home equity.
Yeah, definitely. That would be the better use of it. We also talked about conventional financing. Your standard, 30-year fixed. But typically, what would you need for a deposit for that to get started for an investor?
So it seems like everyone wants to put down as little money as possible. And I would say like the trick for buying a house, as a first-time home buyer, 3% down, and then trying to get the next one for as little as possible, is basically you have to leave a trail of 20% equity behind you. So if that happens in 6 months, that's amazing. You could then go buy another house, rent this one out, and only put down the 5%. It's if you get into a situation where you put down 5%, you don't have the 20%. You can't really have more than one house without 20% equity from a conventional bank at a time, except for that second home. And nowadays you are paying for it.
Yeah, the interest rates are definitely different for an investor than a regular owner-occupied home, right?
And so like I say minimum 10% down for an investment home, and your credit better be above 740, but you're still going to probably have like 2 points on top of that. So a point is 1% of the loan value, so you're talking already 12% down, but those 2 points are just fees, prepaid interest that you're paying. So it is more expensive, but at the same time, if it's how you get your house, the power of real estate and like leverage of the amount of cash you put in versus keeping all the equity on the upside, just do it, really. Buy. Right?
Now, I have had some other people, ask for, what's another way? And really, if you have a partner, maybe have what I call an equity partnership. You've got one person is lacking one area versus the other. One person may have like stellar credit, another person may have the most cash, so maybe you partner together. I do know some other agents that have done that. When they go out and they buy properties, fix them up, whether they're flipping them or, they're going to keep it long term. But that can be a good way to partner up with other people too. And it may have you definitely not have as much cash to have to put into it, but you have ownership in the property, good cash flow.
Another like thing to look for in a partner would be a strong salary or W-2 job, because that's what's going to let you sail through financing conventionally. Like what I was saying before about leaving a trail of 20%, that sounds easier, but you'll have to have leases, tax returns, you know, appraisals and stuff like that on the property that's about to be rented, because we're using that income, you know, to qualify for the next property. But if your partner, you know, is making 175,000 on a base salary, that's very valuable in getting qualified for loans. And they might not realize the true value that they're bringing to the deal too. Like you guys could split the 20 grand or whatever the purchase price is, I mean, the down payment, and qualify for this amazing place because of their strong income. And as you know, real estate agents, you guys might not have that history yet. And so a base salary is like the best thing for, you know, getting qualified for a loan, but also complacency. So you don't want to go and risk it to get, you know, your loan. So
it's you have to have, you know, it's important to have, you know, that a lot of people say, well, I want to get into real estate and I want to be able to bankroll, you know, I want to be able to have that money. I want to be able to quit my main job one day. And I'm like, well, why would you want to do that?
Yeah.
I mean, because we have, you know, it's just the way that, you know, life is, you know, you're going to have debt, you know, you're always going to have debt. A lot of people want to be debt free, but I'm like, well, the only way to continue to, you know, to grow a lot, you have to have that stability of income. And when you're building up on a real estate portfolio, that cash flow isn't going to sustain, you know, and be sustainable to where you can actually use that LLC to buy one property after the other until you have that cash flow coming in. So you're going to have to guarantee that loan, meaning your finances are going to have to be in place. You're going to have that income coming in. So, you know, having, you know, the W-2s and having that 2 years worth of income that you're actually showing on your taxes is going to help you qualify for that. So having a partner that has that, if you're in real estate now, and maybe you haven't been in a business for 2 years, or maybe you're self-employed or your client's self-employed and you don't have that 2 years, having someone, you know, a partner that does have that stability will be helpful, you know, especially in the beginning. So, anybody have any questions about that or anything so far? Cool. All right.
People are asking for your contact info, so I gave that to them.
Thank you.
Cool.
No more questions.
All right. So another option that's probably not used very often, but I thought it's definitely worth mentioning, is seller financing. I did have a lead a couple months ago where the gentleman had used, you know, he bought a couple properties from a seller and that seller financed it for him, you know, and he's working on paying that back. The interest rate's a little higher, but the way that works is that you guys come together on terms. Purchase price, how it's going to repaid, you know, what happens if it's defaulted, you know, you're going to have to go through an attorney to get all that drafted up, but it could be an option for some people for the right situations. So I thought at least worth mentioning. And then we discussed hard money lending. So Annette, who would you say that is the most useful for? Because I know we all run into it all the time, especially when we as agents are running into properties that have been flipped. And we see properties, you know, we have clients that are using hard money. So who would you say would be a better fit for that, or what situations?
I would say someone, a risk tolerant person that sees potential in a property. Typically with hard money, it's going to be expensive but easy, so you'll be able to buy something maybe that you otherwise couldn't, but then how are you going to, like, again, get it so that you're able to pay for the interest every month on it while you're organizing and creating value to then ultimately refinance it and replace it. So people doing hard money, I would say, as someone that's churning and always, like, you're not married to the loan, right? Your goal is to get it back as quickly as possible. And so that might not work for someone that wants to buy, you know, the Cary townhouse or something and just sit on it and hold. That's not going to work for that. But if you were trying to, you know, do something a bit more value add, I would say.
Yeah. So would you say like more someone looking to flip a property?
You could flip it, or, I mean, the goal could be even to keep it, but there has to be like some kind of an action, like you've created the value, you flipped it, and then you can refinance it and pay off that initial loan, because you have to get rid of, it's great.
Quick,
it's
right?
great to get the hard money easy, but you want to get rid of it just as fast, because in my case, I'm paying like 12% interest only. So you borrow 400,000, that's $4,000 a month plus 2 points every year. So that's 8,000, right? You have to make more than that off the investment then. So how are you going to make sure you can do that?
Right. So it sounds like you would want to, either refinance it pretty quickly and move on to your next investment if you're going to be using that, because the interest rates and the fees, right?
Yep.
Okay. So how often, just to say this, I know you said you had a couple, like how many hard money loans can you have run at one time?
How many can I have right now? I have,
But not you, but just in general.
you can have as many as you can get approved for. I mean, like at Thanksgiving, I was on the phone with my guy saying, okay, we're about to pay back a loan. And I was like, and I'm done. I am done, right? Now I've got another almost $1 million since then of hard money loans. And it's like, it's when you find a deal that you can work. And I'm not desperately trying to get these deals and like, misallocating finances, obviously, because that will end really quickly and fast with these kind of interest payments and all that. So just make sure it's a good deal. And I think you could, if you can confidently pitch it, I don't think there's a top number that you could get. I would say the thing with hard money is the top end of the price you can make the numbers still work at. Like you can't borrow 2 million on one deal and be paying $20,000 a month and expect that to work. I can't figure those numbers yet, but you can make all the deals work like at less than 300,000 or 400,000, I would think.
How long is a hard money loan?
It can extend. It's all like up to the person. Mine would be when I'm asking for the money, they always want to know. So like one of mine is perpetual, like it'll just stay until I say. One of them is very short, like 6 months, and another one is like 6 to 9 months. But for those hopefully have a relationship where they would extend and not turn into like really gouging you on prices, and then build an extra time. And get ready to pay for this money. It's expensive. So get over that. Yeah.
Do you like personally use the same hard money lenders like that you built relationships with and that trust you?
Yeah. So I have only ever used one hard money lender, and it was the same guy from my very first deal in 2009. And I was amazingly lucky. It was a family friend, right? So, but the money still had to get paid back always. I would be out of the business a long time ago if that wasn't the case. And so now I've made it that I can just text and get that kind of money. I don't really need to be doing a presentation or whatever it is. So like, that's obviously the goal for everyone to get to a position like that with their hard money lender. Since then though, other hard money, and there's a difference between certain hard money lenders. I know sometimes Angel Oak is a great bank to reach out to if you guys are thinking of this. They're very, not loose with financing, but they do like bank statement loans and stuff like that, Angel Oak. And then a company I'm sort of working with right now is New Jersey based. It's called First Equity Funding. My problem with buying these with hard money is that you've put down due diligence, and like, I know my guy can close. I'm not worried, right? This First Equity, I could put down 50 grand in due diligence or something, and then they could not close. From New Jersey, they could not understand the need for speed in North Carolina or whatever it is. So it's complicated, and you have to constantly ask people, Google them, Google search, call them up. This person could work. This person's never going to happen. So
it sounds like you got to do your research.
Yeah, it's not easy.
That, right. Yeah. One of the things, like I mentioned, was like having a local bank, and the difference between having a local bank and having that relationship versus a larger bank. Like larger bank, like a Wells Fargo, Bank of America. They're going to have a lot more tighter restrictions as far as what they're going to lend versus a smaller bank. The relationships that you build with smaller banks, they are more flexible. And you can move a little bit easier. Not saying, like he said, they're not so loose with cash, but their criteria is a lot more lenient than it would be a larger bank. And having that relationship, and will help you continue to use them over and over again. They understand you, they know your finances, your strength in finance, and will help you get to that, to continue to grow your portfolio. And also mortgage brokers like Ned here, they have a lot more programs that are available, a lot more resources and other, even investor-backed resources that can help you get those, to help you use that as an option. I would definitely consider that. There are a couple tips that Ned and I discussed as well, and they're almost kind of like myth breakers a little bit.
Yeah.
That you did touch on one of them. It was about things to do to make sure you have your stuff in order is keep your debt to income ratio low. Your DTI will help you with rates as far as what you can qualify for. You want to keep that low. I mean, just how much you have coming out versus coming in every month. You know, you want to make sure you have that.
What would you say is a low? What would the range be ideally?
Probably what, 40?
So like if you could keep your debt to income heading for, so it's also works, this is like, would be for like the honors kids or whatever. You've already assumed you already have your one house you live in, you know, you have your good credit score, you have your job and stuff. And then this is building on top of that. So including all that debt and the new mortgage, you'd want to be like below 43. But if you're going to buy like an investment property, or second home, you can get closer to 50% on the back end as long as your credit score is like 780 or above. It's so crazy how much it's about credit score for using like a more fixed, permanent financing like a bank or mortgage broker. Something you said about the small banks too, what can be great about them is that they know their market. Like, for example, I used to have some places in Cape Cod that weren't year round, or they're just like strange condo shacks or whatever it is that you could never get financed from, somewhere. So you have to find a Cape Cod bank or, Outer Banks bank or whatever it is that understands that kind of product. And so don't get discouraged when you go to Wells Fargo and they say, no, you can't finance a seasonal cottage, right? Of course, they're going to say no. You have to go and find someone that will say yes.
Right. Yeah, so don't just I think that's the greatest point is that if the door gets closed on one area, keep continuing to try. You never know. I mean, and even when, especially this market where the appraisal values are, I mean, we've been saying in real estate that, mortgage brokers, smaller banks that have different appraisers, and they all are going to make a difference when you're thinking about cash flow, how much you pay for the property, and how long you're going to keep it. So definitely smaller banks and mortgage brokers I'm a fan of. And you've already mentioned it, credit score. One thing about it I like to say is check your credit score. Check to see what's on your credit. You don't want any surprises or any hiccups, when that time comes. So keeping your debt to income low, checking your credit score, even if you do it like once a year, it's probably sufficient.
Once a week is not, a year is not sufficient. You need to download Credit Karma right now. Right now.
Yeah, well, talk about this too, though, because some people check their credit scores and it's not the FICO, that you're actually looking for. So it can be a little bit of misconception, right?
It can be. Credit Karma, I think, is really good. I tell people to download it all day, every day. And then, because what it does is it tells you it is, and then use it for like, not just, you see 740 or whatever, find out why you're there, read there's like 6 factors: age, utilization, inquiries, number of accounts, derogatory accounts, and I think that's it. Yeah. But and some of them are, and late payments, obviously, which I don't ever think about because you're never going to get me out of late payments. I would literally beg you for the $50 to not have a late payment, then have a late payment, and charge the rest of my month or something. But it's so important because there's certain bad credit that's easy to fix. Like you could come to me with a 550 and like a month later we could be above 700, as long as it's not late payments, pretty much.
Well, the late payments stay on is it like 7 years? I
guess so. Yeah, that's what they say. It's hard because I'll never know if they've fallen off, right? Because it's after the 7 years. But
I would argue. I had a one late payment thing that was BB&T going to Truist and then having trouble logging in, then getting COVID, and then having to go to the bank and physically give them a check, and I was like 2 minutes late, so it was like a day late. Do you think like if you call the credit company,
you could just dispute it at the financial institution. We could try that.
Yeah, I used to work at
It just
Truist
really
during that
bothers me.
merger and that
It made
happened
me
with a lot of
like where I
people,
was
so I would
just-
go there.
Yeah, and I used to work in banking, so people would often dispute things. So yeah, I would definitely call the bank itself
Yeah,
and
it just,
dispute.
it's like one of those, I just was like,
Yeah.
because I kept trying to log in and I like stayed on hold for like 50 minutes.
Yeah, things
and
happen,
Never could get in.
but I would definitely try it. I wouldn't just let it be.
Ugh.
There's a couple of questions I've
Okay.
done here. Rates on hard money?
I pay 12% interest only with 2 points a year.
Okay. But it depends on the person.
Yeah, it's always higher. You're gonna,
Mhm.
and it's not about the rate. It's about the equity you're gonna create. You can't be sensitive about the rate when you're talking hard money, because you have to know the deal's gonna work. That money needs to come quick, and like maybe you even, because you're slamming this deal together, you knocked off enough of the price to make up for that even. Which is something you can do with hard money, is like not have to have inspections and not have to have any mortgage involved really to slow things down or get hung up on anything.
So a little quicker turnaround to be able to have that cash flow.
Yeah.
And then we have one more. Would this be smart or able to be done to build an STR tiny cabin? I don't know what STR means.
Short-term rental. The
Okay,
problem with
there you
that
go.
is when you go to refinance, if it's too tiny, you basically have to be at least 400 or 600 square feet to get a permanent loan on the other side. So it can't be too small.
Thank
That's a
you.
good question.
And then with short-term rentals, that's basically the same as commission income. It takes 2 years of history on your tax returns for us to be able to count that income. And say you make 24,000 in profit your first year, and it's your second year, they would divide it by 24 months. So it would be only $1,000 a month rather than the 2,000 that you've earned. So if you can qualify,
Mhm.
then it works.
It's good to know. I don't think a lot of people think of it that way when they have the Airbnbs.
Yeah, and you can't really buy a place. I haven't found any financing yet that understands, short-term rentals and able to do that. The same as like banks love salaries, they love long-term leases.
Mhm.
A lease is the best, right?
Yeah.
I have a question.
Sure.
I know most of you have like properties out of state, right? Is that what you were saying? So how do you have someone that's there like managing them, like a property management company, or like how are you going, or did you live there at one point, or like how are you doing that?
So for me, no, there's so many properties that we really couldn't have a property manager manage them all, and really not a good property manager in the area to do it. So we had to start out on our own, doing it all on our own. And now what we've done is kind of, as far as maintenance, which is one of the biggest issues, and one of the biggest, one of the things that people always worry about, well, who's going to maintain it? And that's why they want a property manager, so they can have that peace of mind, is created my own little maintenance crew. So, they maintain all the properties. So I had to do things a little differently, but for the most people, for the majority who are going to have probably 10 or less properties in their portfolio, property manager is the solution to have that peace of mind. And there's several different options here. So then the next series, we're going to have property managers. I'm going to have property managers come in and talk to you about what that process is, fees, what they look for to help you get a property, rent it out, vacancy rates, things like that. So we'll talk more in detail about that in the next series next month. But yeah, I've had to piece it all together for me. Yeah. Mhm.
She has dozens and dozens of properties. Mine are like, I've not had that many. So we as me and my sister, all these deals I've done, except for my most recent one, has been with my sister. So she's really good at kind of managing and keeping the Airbnb rate high. I'm a lot better at finding them, financing them, and like doing that. I'll just like hang up on the person, I provide different customer service as a banker, as a landlord.
You're very
Yeah,
patient with
yeah,
us.
because I have to work with other people. I'm like, if you don't like it, then leave. For my Airbnb, yeah.
Let me put this hat on.
Yeah.
So
You can't take it personally too.
Yeah.
Um,
Well, it sounds like you got a good equity partnership with
yeah,
your sister.
it's the best, yeah.
So good. That's good. Any other questions?
Back to the tiny house, so it needs to be 400 to 600 square feet. What about the appreciation value so that I could pay it off after the appraisal?
The mortgage company that the final financing place, you'd have to find a place that would do you start Googling short-term, tiny house financing and stuff like that. Having 2 years of keeping it with the hard money and then having 2 years of Airbnb history could work. Google first equity funding, see if they would do something like that. Something tells me they might. Try again. But the problem with the bank I work at is we have a 400 square foot minimum, so we wouldn't be able to do it.
All right. So next I wanted to, we talked about this, and I've had this question come up from other agents and also some of my investor clients. This is along the line of tips, but things that are good to know is people often ask me when they're buying their property, should they put it in their personal name or should they put it in an LLC? So in order to qualify upfront, you're going to be the guarantor. In most cases, your LLC will not have enough income to qualify for a loan, so you're going to be the guarantor there. Now, a lot of people will say, I'm going to put it in my LLC. It's going to be an event to where if you have it in your name and you put it in the LLC, your lender could call that note due. And whenever, I always tell you to talk to your attorneys about that. And I've often had attorneys go over that when I'm at the closing table with my investors as well, because they don't know and they think it's just, I'm just going to put it in my LLC. I think what the main thing they're trying to to avoid is the liability of it. You definitely want to talk to, I often say, talk to your insurance company. Maybe you need to increase your coverages as well. But if the house is paid for, you pay for it in cash, yeah, you can put it in an LLC. But if you're financing it, that lender could call it due. Now, would it happen? Who knows how often it happens, but just know that could, and you don't want to be in a position where you got to call that note gets called and you have to figure out what to do and refinance at that time. So I just want to put that out there because I know it's not on everyone's radar and it is a big concern for people, and you may have clients that have done that, but just so you know, from this point forward, that they need to talk to the attorney about that before that happens.
So it's always probably good to just say, hey, if you're going to put it in your LLC, have you talked to your attorney to know the rights?
Mhm. Yeah.
Advising that. Perfect.
Definitely. What's next?
A little about the LLC and financing is a lot of times investors, I was like Mr. LLC in the beginning, like I had to have them from just I don't even know what, this idea that I had that the properties have to be held in an LLC. As you're getting your first investment property, it's going to be so much easier to just go to, assuming it's, already, you've bought it with your 25% down type purchase, not these hard money type of deals that I'm talking about. But the typical investor client that the real estate agents are working with their 20-25% down, having it in your personal name is going to really make it sail through and close in the 30 days that it's going to need to. Bringing in and changing to an LLC means you're going to change to a bank that's going to slow things down. They're going to dive into these unnecessary needs. You could have, $150,000 salary and just use your W-2 and sail through, but it gets more bogged down with the LLCs. So the first 1, 2, 3, maybe not. As you get more and more and you are established and your tax returns are showing and stuff like that, it could be a conversation, but exactly still what she said, you can't just switch to an LLC. You'd have to do then a refinance of the loans into the LLC and all that.
And then it has to qualify. So that's going to be a different process. Just want everyone to know what kind of expect if that's what you want to do. I think we've covered pretty much everything. We talked about the different tips, the Airbnb. I want to make sure that we touch that as far as that goes, and the local bank. So if you guys don't have any other questions,
Anybody in the world?
does anyone in the world out there have any questions for us? No?
And
The
one
next series will be on Property management, is that right?
Property management, the next series will be on property management. We're going to invite property managers in. I know from the first series, I talked to you about kind of putting your investor hat on and your homeowner hat on, you know, and really being able to decipher when you're looking at homes, kind of what to do to make that house rentable, you know, like that's one of the biggest questions. And property managers have different perspectives, you know, it depends on where the house is located, you know, what other similar rentals are like in the community that you're buying in, kind of like how much money you put into the property to get it ready. I think the hardest thing is, you know, we have our own standard of living, and it just may be different other places. So some have different requirements of what they want you to do to get the home ready, and others, you know, it may just be simple, you know, we're not doing a whole lot to change it out. But I think you should know, because I think if buying a rental property in Cary versus buying a rental property in Sanford, it's probably going to have two different standards and what those fees are. So, and that's going to really help determine your cash flow too, how much you have to put into the property to get it ready, to get the most income out of it. So I think that'll be really exciting. Add another layer to your knowledge as far as investing. So
We do have another question. Does hard money loan cover renovation costs?
Yeah, it depends on, it all depends on the hard money lender. Some of them are very strict and they'll say right there, like, they'll only lend up to, you know, 75% of purchase price, but 100% of the renovation cost, or it really can depend on the hard money lender. But if you have hard money lenders financing it too, probably means that like you're low on cash to invest. So you're gonna probably be like using credit cards, personal loans, and like anything else that you need to do to get it, you know, to the value that you know you can create, right? Obviously, you're gonna be very risk tolerant if you're talking about hard money deals and stuff like that.
all right, so I guess we end a little bit early today, but I think we covered a lot, you know, kept it really, really specific about, you know, the main points of what people can start and have a good base to get their finances in order. So I look forward to you guys coming to our next series in May. I thank you so much for coming today. I'm always happy to talk about real estate investing. I did have a few people reach out to me after the last series to talk further. So if you want to know more, either have additional questions for myself or Ned, we're happy to answer and be a good resource for you. You can reach out to me Facebook through Messenger. I'm sure Alexandra shared my contact information as well, but you know, I'm always open for a conversation.
Email?
You can email me and then we can talk that way and set up a time to talk after, you know, I'm open to that. All right. Well, you guys have a wonderful Wednesday. And thanks for coming.